have Ryan queued up and ready to go, Raleigh?
Yes, we do.
Quantum Trading Strategies. He's been trading since he was 16. He's actually one of the young authors ever to publish a book in the futures industry. And he will focus on the truth of trading. So he will tell you exactly how laborious it can be, even though it can be terribly exciting at the same time. You know, Ryan had a $15,000 account, not a paper account, a real trading account, and he turned that into 107,000 in less than 90 days. Short-term trading, the S&P. So real money on the table there. Ryan, we have you all set up for today.
Hello.
Hi, Ryan.
Excellent. Hey, Raleigh. How are y'all doing?
We're
Hey,
doing
hey,
great.
Pat. Hey, Nikki.
To come on in person, Ryan, and we can see your face.
I wish I could, but I don't even have a camera on the computer that I use for these presentations.
All right.
Good save.
And believe me, y'all don't want to see my face. Y'all don't want to see my face. I really appreciate you attending. Never before in the history of trading has it been easier to become $1 million trader. And I say that, and I've been around for a long time. And over the next 45 minutes or so, and I'm going to have to push it, but I'm going to give you the blueprint for becoming $1 million trader within the next 5 years, regardless of how much experience you have or the size of your trading account. But before I get into the blueprint, I do need to give you some context and a foundation behind that blueprint. It's actually very important that you have this foundation in order to give yourself the highest probability of success with the blueprint for becoming $1 million trader. And as I mentioned, never before has it been easier to accomplish this feat than it is right now. And there's many reasons for that. First of all, I took my first trade over 30 years ago. As I said, I've been trading since I was 16, and this was long before technology came onto the scene and started making a real impact on how traders trade. In fact, when I was in college, I would go to the library and record the previous day's option prices by hand on my grid paper from the Wall Street Journal. So if you can imagine that. I would also receive commodity paper charts on Monday afternoon for the previous week's price action. I know some of you are dating yourself. If you know what I'm talking about here, you're kind of old. But these usually came in the mail on Monday afternoon after the markets closed on Monday. So it was even a day late then. And here's a photo of the charts, some of the charts. This, I actually have kept some of them over the years, and this is actually sitting on my desk right now. And you can see here, this is a quarterly chart, and I kept those going all the way to about June of 2001. I think that was the last one that I received. So I've been doing this a long time. You can see kind of the technology or the lack thereof. But a few years into my trading, DTN came out with a quote machine. And this is where they basically sent you a monitor and a receiver, and you would get real-time quotes for about $400 a month. I'll get to cost of trading here in a second. Then came the home computer, where System Writer. Again, you're going to be dating yourself if you know what in the world I'm talking about with System Writer. But System Writer was the first program on floppy disk designed for backtesting technical analysis-based systems using what was called easy language. And then came Supercharts, followed by TradeStation. And most of you know what TradeStation is. Well, they started off back in the 80s as System Writer, and then System Writer Plus, and Supercharts. And speaking of trading costs, and I'm almost embarrassed to say this and to admit this, but back in the early days, I paid as much as $195 in commissions on a single trade. Yeah, I still shake my head when I think about that. Plus, every single order had to be called in by phone, no cell phones, mind you, landline phones only. And if you weren't filled immediately, the broker would call you back with the fill when it was filled. That's the way that it worked back then. So here's why I'm going through all of that. Okay, when I started trading, because this is really, really important, and Pat told you I was going to tell you the truth about trading, well, here it is. I read an article about how approximately 85 to 95% of all traders lose during any given year. That was back then. Those were not great odds, but like most traders that I've spoken with over the years, over the last 30 years, I didn't think those odds applied to me. And I knew I would be different. And most of you know that you would be different as well. That's just a standard way. We wouldn't get into trading if we thought we had an 85 to 95% probability of losing. But looking back, given the lack of technology compared to today, the lack of timely information, the excessive costs, just to place the trades, and the lack of efficiency, I can see why those odds were so bad back then. And now that there's instant access to virtually any information you could possibly imagine, the execution efficiency is off the charts. And now there's actually zero commissions that are really available by many, many brokers. And of course, with the incredible technology we have today, obviously the percentage of successful active traders has gone up substantially since I started trading, except it hasn't. The statistics have actually remained relatively steady my entire 30 years of trading. 85 to 95% of all active traders lose during any given year. In other words, it's not the technology, folks. And if this doesn't make you pause, it should, because those odds do apply to you. And over the years, I've talked with thousands of traders, and I can tell you exactly why the statistics have not changed. And I'm not going to go through a lot of those today. I spend time in other areas talking about this, but traders don't stick with, one of the reasons is traders don't stick with a strategy more than 3 months on average. And I've taken poll after poll after poll after poll from traders, and this is pretty much it. That's the average, is they don't stick with anything more than 3 months. This is major, major issue. Again, I could spend an entire hour on that one topic alone, but I'm not going to do that. And let's see if I can go to full screen on here real quick. There. That should be better. So another reason is that people are overwhelmed with information. I mean, you're going to be overwhelmed with information today. In all of the presentations today, right? You're going to be overwhelmed in your email box. You're going to be overwhelmed with just thousands of stuff to look at and consider, and the next best shiny thing is going to come out. And then finally, traders know very little about trade size. And this is the one that I want to spend a little time on. Trade size, several years ago, speaking of trade size, several years ago, as you mentioned, as Pat mentioned, I entered a worldwide real money 1 year long trading contest. And due to some paperwork issues, I wasn't able to start taking the first trade in that account until January 17th. And so it was a year long, started on January 1st. I wasn't able to take the first trade on until January 17th. But on that day, I took my first trade, and 68 days later, my account was up a staggering 614%. It was the fastest anyone had ever reached 600% in that contest, and I don't believe anyone has come close to beating it since either. So in 68 days, I turned $15,000 into over $107,000, not because I got lucky on a few good trades, because I was short-term swing trading the S&P 500, and it was actually based on a 10-minute chart. But even so, the strategy was good, but it wasn't great. It just wasn't that great of a strategy. It was really a basic strategy, but it happened to have a fairly decent run. But the key behind my record-setting growth was my powerful compounding strategy. It was not the underlying strategy. That was just a means to an end. Trade size is the key behind any serious success in trading, period. End of story. You can take that to the bank. I started trading in that contest with a unit size of 1. And as my account reached a certain level of profits, I increased my unit size to 2, and then to 3, and then to 4, et cetera, et cetera. And I believe my unit size at the time that it reached that record was at 7. That was it. But had I not followed the compounding plan, my account would have almost doubled. That's it. It would have gone from about 15,000 to around 29,000. But the compounding created exponential growth. So if you want any realistic shot at becoming $1 million trader, you must have, and I don't care what it is you're trading, whether you trade my stuff or someone else's stuff, you have to have a solid, efficient compounding trading plan. Period. End of story. You're focused on the wrong thing if you don't have that under your belt. So the trading industry, however, obviously has you focused on where to get in, where to get out. And why do they do that? Well, they do that because that's what's sexy. That's what makes you seem smart. That's what makes you seem like you can beat the market. And quite honestly, it's a lot of fluff. It has its role. Don't get me wrong. It has its role, but the growth has always come from compounding. All right, so never before, I stated, has it been easier to become $1 million trader than it is right now. And that's not because of technology, and it's not because of all the information we have. It's actually because with a lower risk strategy. In fact, the lower the risk your strategy, the more efficient the compounding strategy works. In other words, the faster you can grow your account. So the lower the overall risk, the faster you can grow your account. Let me repeat that. The lower the overall risk, the faster you can grow your account. And usually when there's low risk, there's also low profit potential, right? But that's not what we're focused on. We're focused on the risk right now. So about 2 years ago, something in the trading world actually did change that makes it easier to become $1 million trader right now than it has ever been in the past. And what was that one event? It was that Monday option expirations came on the board with SPY options. That was the big event. It used to be that there were only monthly options, and then there were quarterly options, and then there were Friday expiration options, followed by multiple Friday expiration options. That started about 5 or 6 years ago. And then that was followed by Wednesday expiration options, and then finally a couple of years ago, Monday expiration options came on the board. And if you understand the basics of option trading, then you understand that time decay accelerates the closer the option comes to expiration, right? So basically what we have is on Monday, Wednesday, and Friday options, they gave us the continual access to accelerated rate of time decay. So on this chart here, you can see this is a rate of time decay, and most of you have seen this chart and you know exactly what I'm talking about. But at the last part, the last part of the life of the option, the last 4 or 5 days, you see this big drop in time value, and that's how it works. And so what Monday, Wednesday, Friday options give us is this continual access to this part of the time decay chart. Instead of having to wait, get into a month option and having to wait for 25 days for the majority of the time decay to come off, it all happens then. And for those of you who know how to take advantage of it, with limited risk, there are some incredible trading opportunities with the Monday, Wednesday, Friday options. And to be clear, though, you are not going to make a killing trading these weekly option strategies. They're not designed for you to make a killing trading the weekly option strategies. The profit potential of these are very limited, as a matter of fact. In order to keep the risks as small as possible, the profit potential also is going to be limited. But thanks to the power of proper compounding, you don't need to make a killing. And that's what I keep trying to tell our traders again and again and again. They're trying to pick the bottoms and the tops and these big moves and massive stocks and what's going to be the next Netflix. Man, you're never going to do that on any kind of consistent basis based on the stats out there. There are going to be some that are successful, but most are not going to be successful doing that kind of stuff. And even then, you're going to be very limited in your overall growth. And so you need to focus on proper compounding. So if I were to pinpoint the number one cause of failure in trading, it is trying to make more from a strategy than is realistically expected. And it leads to all sorts of issues. First of all, traders don't make as much as they expected, and they quit trading a strategy. Again, here's where that 3-month issue comes in. They stop trading a strategy within 3 months because they're not making what they expected to make out of it in 3 months. And so they go on to the next get-rich-quick scheme. And of course, no one calls their stuff a get-rich-quick scheme. They all call something else. But that's what we do. We go from one thing to the next, to the next, to the next. Listen, I've done it. I've been there. I've seen everything out there. Over the 33 years that I've been trading, I've seen everything out there. And so I know what it is, and I know what traders do because I've experienced it all, the entire cycle myself. It also leads to a situation where people start off trading way bigger of a trade size than they should because they don't realize that there's all the compounding profits that are available in the near future. So as long as if they can start off small and then as they succeed, grow their account based on compounding, then they have a much, much higher probability of realizing a serious success in trading. So with low risk, high probability option strategies, you don't need to make a killing to become $1 million trader in the next 5 years. In fact, if you can make, get this, just an average of $50 per week, that's it. If you can focus on making $50 per week on a single unit size, then you can compound that $50 a week into as much as $1 million in the next 5 years through compounding. That comes to just $2,600 non-compounded per year. That's it. So how in the world is every trader out there not focused on compounding? Because that's what's going to ultimately give you the ability to become $1 million trader. So your first and foremost goal in trading should simply be to get to where you are making an average of $50 a week with low risk, high probability weekly option strategies. And I limit this to weekly option strategies because it's very difficult to keep the risks as low as you can keep them with the weekly option strategies, as you are about to see in some of the examples that I'm going to give. So having said that, you may fail the first month. You may fail the first 2 months, or maybe even the first 3 months. But I'm telling you, there is nothing worth learning more than this for your long-term account growth. There is nothing else on the planet that is worth taking the necessary time to achieve this one singular goal. Because once you start achieving that one singular goal, the compounding takes care of the rest. Unfortunately, though, most traders, 85 to 95%, don't take this advice. They don't heed the advice. So I started trading 33 years ago. I've been doing it full time. I've focused on everything you can possibly imagine, and you can ask any of my family. I spend 50, 60 hours a week. The markets, I'm saturated with the markets. And I've been doing that full time for well over 25 years. But unfortunately, most traders aren't going to heed that advice. And then again, most traders will never watch their accounts grow by 600% in their lifetime, let alone 68 days. And that's the truth of it. Most traders will not ever experience that kind of growth in 10 years, 15 years, 20 years, let alone 68 days. And why is it 68 days? Because of the compounding. It wasn't because I had this massive, tremendous strategy. In fact, I stopped that contest, talking about that contest, after 68 days because that trading system did nothing the rest of the year. And I was able to still take third place with a substantial return, but literally the underlying strategy did nothing. And if I had not compounded during the time that it did well, I probably wouldn't have even taken a place at the end of the year. So that kind of gives you the full story of how compounding has both good effects during good times and good effects during bad times because it protects profits as well. Or forget about 600%. How about 1,800% in just 2 months? Grow your account 1,800% in 2 months, like Jake from Texas did this year trading my stuff. So what I told you is how basically Jake out of Texas took a $3,000 account and grew it into $54,141 in just 2 months, trading the blueprint I am giving you today. Real money, real account, somebody else doing it. And I realize that some people find that hard to believe, so I'm going to share with you my email exchange with him because I need you to understand how important this is. All right, so he contacted me, thanked me for all that I had given him and for the ability to achieve this. And I said, hey, will you be willing to make a comment and encourage other people to focus on this? And he says, sure, but I'd feel better if you gave me the comment that you would suggest. So I came up, I asked him a bunch of questions, and I came up with a comment. And I said, hey, my name is, he asked me to block out his name, but he says, my name is X. I've been trading for 20 years. Over the last 20 years, I've lost a lot of money, but on January 22nd, 2020, I took my first trade using Ryan's option spread approach. I had less than 3,000 in my account. And as of today, on March 25th, 2020, I have closed out $31,603 in gains. That's how much he had told me at the time that we were talking on the phone when I sent this over to him. He says, on top of that, I'm set to capture another $10,000 in gains this Friday alone with my current positions. I've grown the entirety of my account on Ryan's low-risk option spreads and have huge upside potential, and then compounded the trades. All right, you see that? He started, and then he compounded, and then he grew his account very, very quickly. I'm not going to read the rest of it. I just want to show you that. Here's his response to me. He says, Ryan, I'm okay with the note below, but I would ask that you take one more step to protect my privacy. I work for a large bank and want no blowback of any sort. Recognizing the value of the last initial on generating the field of credibility, would you just change the first name to Jake? Which, of course, I did. By the way, I closed out my extra longs this morning's rally, and current account stands at $54,141. I'm going to email Spring back. Okay, so there you have it. That's the email. Okay, Jake had been trading for 20 years and spent tens of thousands of dollars on trading strategies, option strategies, and trading education courses, but it wasn't until he started trading my blueprint for becoming a $1 million trader that he started experiencing any kind of real success that grew his account by 1,800% in just 2 months. Now, I'm going to be, again, really frank with you. You should not expect to duplicate what Jake G from Texas accomplished. Okay, that is not a realistic expectation for you. Part of the reason for that is because a large chunk of his growth was during the March sell-off in stocks due to the coronavirus pandemic. Now, it's not what you think. He was trading my strategy, but what happens is when volatility increases in weekly options with my strategy, if you know how to take advantage of the Monday, Wednesday, Friday weekly expiration relationships, when stocks are cratering, wow, there are some incredible opportunities during high volatility that comes when stocks sell off, and they're almost unbelievable. If we hadn't been taking them live in my live session trades, most of the traders wouldn't believe it. Here's one example of a trade that we took when stocks cratered below 240. And this particular trade had zero risk to the downside. In fact, it was guaranteed to make at least $75 if stocks continued to crash. But if the market stayed around where it was for the next 4 days, that's all that this trade was, the life of this trade was just 4 days, this is the kind of money that could be made during high volatility. Now, to the upside, there was risk, but it was capped at just under $200 no matter what. But the market would have had to skyrocket over the next 4 days. So in the meantime, before it ever reached the risk zone, it had to pass through a profit zone. As you can see here, the market was trading below 240. Before it ever gets to where this particular trade would start to lose a little bit of money. which would have been around the 257 area. The market would have had to go through the bigger profit zone of 242, 245, 247, and would have had to do it fairly quickly. So as it turns out, this particular trade produced a $925 profit, but if it had closed at around 245, you're talking about a $1,200 profit on a single trade, all because of volatility being higher. So when you're trying to make $50 in 1 week and all of a sudden you have the ability to make $925 in a single week, and it can absolutely explode the compounding. So this was part of why Jake was able to grow his account much, much faster, because there were some massively tremendous opportunities for a short period of time. So long story short, unlike most traders who dread a market crash or don't know what to do with the market crash or end up taking huge risks during a market crash, my option students look forward to taking advantage of the opportunities. We're not looking for tragedy to come. That's not what we're talking about. But if it does, we know what to do. Excuse me, we know what to do. Look, honestly, I don't think the market's going to crash anytime soon. There might be some short-lived volatility around the election, but I think we might be in for a few years from this being more prevalent. Of course, having said that, we're always just one world event away from sending stocks crashing, and when they do, you definitely want to be ready to take advantage of the high volatility markets through weekly options when they come. You'll give yourself the potential for a small windfall. So, moving away from that, because that's not what is available right now, one of the most common questions I get is, Ryan, is there a common trade that I can put on week in and week out, rinse and repeat in order to make the $50 a week? And I wish there was, but that really isn't the reality of the situation. And you have to conform your trading to reality. A lot of people say, well, you know, that type of trading doesn't make me comfortable. I'm not comfortable with that type of trading. And I always respond with, well, are you comfortable losing? Because if you don't conform your trading to the reality of what the opportunities are, you're going to lose money. I don't care if you're comfortable with it. If you're comfortable losing money, then that's that. But unfortunately, a lot of traders would rather trade according to what they're comfortable with and not conform to trading based on reality. But when volatility is high, there are certain opportunities that simply do not exist when volatility is low. And volatility right now is low. We've gone through a massive swing in volatility over the last 6 months. It's been a ridiculous 6 months. But when volatility is low, like it is right now, there are certain opportunities that exist that simply cannot exist when volatility is high. And that's what leads me into what we're getting into, what the types of trades that we're getting into today. There are opportunities that exist when volatility is low, when it's high, and also when it's transitioning between high to low volatility as well. This is where the TPO comes from. It's called triple play options because there are 3 different approaches that you have to look at in order to take advantage of what the market gives you, what is available. And that is based on the volatility of the underlying markets. And this is relegated to SPY only. I only deal with SPY when it comes to TPO. I don't have time to go into that today, but there are 3 basic approaches to weekly options, again, in SPY, when volatility is high, when it's low, and then when it is transitioning. And then there are also 3 strategies, if you will, for each of these. Number 1, there are simple option patterns, and we're going to be talking about simple option patterns today. And then there are enhancements that you can make, and then there's profit stacking. And we're not going to get into enhancements or profit stacking today. Obviously, way too much time with that. So what I'm going to do is I'm going to start down the path with a basic option pattern that is available when the volatility is low. And I apologize that we're having to go through this so quickly. However, it's worth it. So I'm going to caution you before we get into the trades and that I'm going to fully reveal to you. And I'm going to fully reveal this pattern to you. There's a lot about trading these patterns in low volatility that I simply cannot cover in this time of span, in the time of time span that we have, and that was kind of shortened today. So if you trade this on your own, you need to be very cautious, and you need to make sure that you start off with only a single unit. A lot of you are going to see this trade that I'm about to show, and you're going to be scrambling to your computer to try and put on as many of these as you can possibly put on, and I'm telling you, don't do it. All right, there are things that there are a lot of details to this, but this particular pattern is not available in higher volatility settings. And if you start trading this and all of a sudden volatility kicks up, you need to stop trading it and you need to move to the higher volatility approach. So what is this pattern? I call it my W option pattern. And yes, that stands for winner. I call it my W option pattern. And it is really trading my favorite low volatility strategy on the planet. And so I have 3 different strategies based on the different volatilities, and then there are option patterns within each of those strategies. So this is a single option pattern within my option insanity strategy, and it's called my W option pattern. And by the way, you're not going to find this information find anyone else on the planet that's going to reveal this stuff to you. So when I say these are kind of secrets, they kind of really are, because no one else even knows they exist for the most part. And there are several reasons for that. But here is what the W trade looks like on a projection graph. If you're familiar with option projection graphs, this is based on the end of the trade. Okay, and the blue line here is where the profit or loss is projected to be based on the close of the particular trade on expiration, wherever the market ends up closing. So if the market ends up closing in this particular trade, and by the way, this is a live trade, I'm in this trade right now. If the market ends up closing at around 350, which is trading around 351, then this trade is projected to make about $75, $85 to $85. Okay. If the market moves down to around 347, there is a very small little bit of risk there. And if the market moves up to 353, there's a very small little risk there. Hence, this is where the W pattern obviously gets its name. So that risk, that's the only place where there's risk on this pattern. If the market tanks, you're going to be guaranteed to make at least $75. If the market skyrockets, you're going to be guaranteed to make at least $75. And if the market stays the same, you're going to be guaranteed to make something. It may not be $75, depending where in this range it is, but it's going to be something, right? So the only risk is in this small area here, and whether the market moves up or down or stays the same, this has a very high probability of making money. Now, there is a gotcha with this. You might be looking at this and it's like, there's got to be a gotcha, and there is. And the projection graph, that gotcha is that the projection graph is not guaranteed. In other words, there could be some fluctuation in the actual results of the trade. If circumstances change over the next couple of days and volatility becomes higher, so volatility gets infused into the options, then the projection graph may look something like this. And you might see the risk drop down to maybe $25, $30 at the 347 level and the 353 level, and then maybe about a point range where there might be a smaller loss in both of those areas. Outside of that, you're probably going to make something. I'll explain this more in a minute. But based on current conditions, this is going to be very close to how things actually end up. So if current conditions hold true for the next couple of days, this is going to be very close to how this trade ultimately ends. So what is the W pattern? What makes this pattern? Well, I'm going to show you what makes this pattern. And the key is that you get the right price. Okay, you can make a W pattern all day long, every day, all day long. The key is that you get the right price. And so there are going to be times where you can get the right price, and there are going to be times where you can't. And that's the key. It's kind of like real estate. You don't make your money in real estate selling. You make your money in real estate buying. And if you understand that concept, you understand exactly what I just told you. So this is the W pattern. You buy one nearby expiration 3-point in the money call option. Okay, that's number one. Number two, you buy another nearby expiration 3-point out of the money call option. And then you split the sell right in between. You sell 2 further expiration ATM calls that are right in between. The strike is right in between your 2 longs, and that creates the W pattern. Really simple, right? Yes, it is really simple. So you're buying the nearby and you're selling the further, and you're like, wait a minute, that doesn't make any sense. Well, it actually does when you start breaking it down, which obviously I don't have time to do today, but this is specifically how this looks. Buy one Friday expiration, 347 point strike in the money call, and you buy one Friday expiration, 353 strike out of the money call, and then you sell 2 Monday expiration 350 calls. So this particular pattern, I'm going to, I trade this on Wednesday, Friday. Matter of fact, this is a Wednesday, Friday, but you can trade it on Friday, Monday. You can also trade it on Monday, Wednesday. I'm going to caution you, and I'm going to have you stick with Friday, Monday to begin with. All right, so Friday, Monday is the one that you want to begin with. And again, this is only available when volatility is low. Now you can take this trade, you can actually take this trade a week before, 2 weeks before, 3 or 4 days before. I like to take the trade 2 or 3 days prior to the long expiration. And by doing that, you give the market time to move in some instances. But you can actually do this on the same day of expiration, which I'll get to here in a second. But here's what you do. You place on, this is placed on at a credit of 75. And I don't have time to explain the relationship between the strikes and why you are guaranteed to make money if the market moves down. That would be the credit. And why you're guaranteed to make $75 if the market skyrockets, which is also equal to the credit. I'm not going to get into that today. But the way you put this on is you put it on as 75-cent credit and you stick a $40 to $50 target. It is literally that simple. We're not going to hold on for $75 because that's not the probability. The probability is not that the market's going to tank, and it's not going to be that the market is going to skyrocket. What we're going to do is we're going to take the higher probability range and just walk away with $40 to $50. And that can sometimes happen in a few hours. It can sometimes happen, it'll take a few days, depending on how long you trade it. But this is why the projection is not guaranteed. The reason is because there's still value in the Monday options. We're going, if we don't take the target, if we don't take the profit target, $40, $50, and what's our goal again? $40 or $50 a week. That's it. And I'm giving you a pattern to do that. Right? So we just take our profit target. If it's not hit, let's say we get down and the market's trading around 347 and the profit target is not hit. Well, on Friday, even though we have Friday and Monday expiration options, we exit the entire trade, which means that we're exiting the Monday options when there's still value in place. And so if the projected value is off by 10 cents, then the trade will only make $65 at 350. Right? So if it's off by 10 cents, we'll only make $65 instead of 85. Or if it's off by 20 cents, which is very difficult to be off by 20 cents, but it can happen, then you might only make $45 instead of $85. So that's why it's not absolutely guaranteed. Nonetheless, there are all sorts of things that you can do with this, including alter it ever so slightly to where you have a more bearish leaning W trade. This is what I call a bearish leaning W option pattern. And this is where you end up having no risk to the downside on the projection and very little risk to the upside and a guaranteed gain to the upside as well. Again, this one is about $75. Now, I actually took this on Friday. This was last Friday. This is exact trade, exact fill, not hypothetical. I took this trade, this slight alteration of what I just showed you at 9:15 a.m. on Friday morning, and it hit my profit target about 3 hours later. And this is the pattern. I mean, can you imagine taking this type of trade on a Friday, being done 3 hours later, and that's it? I mean, you could literally do that. If that's all you wanted to do, you could come very close to averaging your $30, $40, or $50 a week. So there's more bullish leaning trades. There are trades that are focused more on the market staying within a small trading range. But if you simply took this one single trade every week, if it is available, so while the volatility is lower, and put a $40 target in place, you can literally grow your account significantly, exponentially over the next 5 years, possibly even to as much as $1 million with this single trade alone. And look at the risk. Yeah, it might not be this low. It might be $20. It might be $30, but it is absolutely limited, and it's very, very small area, right? So here's the power of compounding. Let's say you don't average $40 or $50. You know, if you average just $10 a week, starting with a $5,000 account, and compound that, you're talking about $35,000 growth over 5 years. Name me one thing that has that potential with this small of a risk. Name me one thing. If you go $20 a week, you're talking about increasing your account from 5,000 to 135,000. You know what that does? $20. You know what $20 a week does with compounding? It beats the best performing stock over the last 7 years, which was Netflix. Imagine that. Okay, that's why how many of you are going to pick the next Netflix? I can tell you how many of you are. None of you will, because even if you do, you're probably going to get out early, right? So that's the power of compounding. So you start with one simple pattern, you get good with this option pattern to where you understand it frontwards and backwards, inside and out. And while you're trading this one single option pattern consistently, and there are many to choose from, but you're going to pick one and you're going to focus on that one. You increase your learning while you're trading that one. You increase your learning to improve your overall weekly average so that you can increase your compounding effect. It becomes exponential. Now, the goal is to eventually get to where you're compounding an average of $100 a week with these low risk strategies. And believe me, you can take this pattern, by the way, you can take it twice or maybe even 3 times a week. Monday, Wednesday, then again on Wednesday, Friday, and then again on Friday, Monday, and make $30, $40 each time. So it is possible to get there fairly quickly, fairly simply, if the opportunities exist. But the key is for you to understand what you are doing. The probability of you simply following someone and becoming a millionaire without understanding what you're trading is very, very low. The W pattern I showed you today will take you a few seconds to place and a few seconds to exit. There's no market watching. There's no adjustments. You either get it your entry price or you don't, and then you exit either by a profit target or before the expiration. So what I do is I do everything I can to help you learn this process step by step. You're not going to be able to do it if you just follow me. So I help you learn this step through a series of educational videos to help set the foundation. But more importantly, I provide 2 trade sessions, live trade sessions a week, where I show you what's available and I provide these trades. I teach it, then I show it to you real-time actual fills. So here's what you get, and I'm going to run through this really quickly. And again, I apologize for how fast we're having to go through this, but you're going to get access to 10 online video sessions. Actually, you get more than that. I over-deliver on this. I'm going to say 10. It's closer to like 16 or 18, maybe more. Then you're getting $1 million blueprint and video. So it's basically putting in a blueprint fashion exactly what I've showed you. You get access to multiple compounding plans and a video where I explain the compounding plans, very simple to follow. Then you get 3 months access to my live trade sessions. I hold those twice a week. They're an hour long. I take a trade live in front of you and I answer all the questions. I take as long as I need to answer the questions. And then I'm going to give you as a big bonus 1-year access to my TPO Trade Finder tool. I wish I had time to go over that one today, but I don't. And then I'm going to give you a personal guarantee of success. Now, this is a huge package, but this is the only one that's designed to take you from nothing to $1 million in 5 years if you'll follow the blueprint. It's $19.97. You're not going to find this stuff anywhere else. You know it. You've never seen the graph that I've just shown you because no one else even knows that it exists. They know, and they certainly don't know how to trade it. But It's 1997. Now, I wanted to take 1 second to talk about my personal guarantee of success because no one else does this. Here it is. If at the end of 3 months you go through this process and you're not consistently pulling in $30 to $50 a week on average, you will send me your trades. I will have a one-on-one consultation with you, and then I will extend your access to the live trade sessions for another 3 months at no cost. If at the end of 6 months you're not consistently pulling in $30 to $50 a week on average, you will send me your trades again. I will have a one-on-one consultation with you, and I will extend your access to the live trade sessions for another 3 months at no cost. And we'll do that again at 9 months. Only at 9 months, I'll give you your money back. And then I'll extend your 3 months access to live trades at no cost again. That's how certain I am that if you follow this blueprint, you will succeed, because the goal is not making $1 million in a week. It's making $30 to $50 a week. And if you can do that, then you're talking about compounding that. So who else in the industry will go through this kind of scenario to help you succeed? No one. Me and me alone. I've never seen anything like it. All right. So this is the $1 million blueprint for success. And if you follow it, you give yourself a much higher probability of experiencing exponential growth. So I'll cut it off there. I had a little bit more I wanted to provide, but I know that there are at least a few questions, and we're already out of time. So Raleigh, I'll hand it back to you.
Well, that sounds great. And Ryan, once again, thank you for a terrific presentation under duress. I think we did a great job. We had some technical issues at the front end, but we came through like a champ. Tremendous amount of information that you shared with us, and I really appreciate the way you went through that. There's several takeaways here that are huge, and I hope everybody picked up on them. But I mean, right off the bat, you started talking about one of the keys is lower risk equals fast account growth. And that just seems counterintuitive to most people. But yeah, the concept of compounding, making sure this is an integral part of your plan, et cetera. These are all foundational things I think that every trader needs to understand, and really do appreciate, Ryan, the way that you've presented that. Folks, check Ryan out at Quantum Charts. He is esteemed in the industry, has written several books on this particular topic. And once again, his special offer there is available. Go to westmarktrading.com. M9-Quantum will take you right there. It's the $1 million blueprint, the access to multiple compounding plans and videos, and a 3-month subscription to the live trade session. And let's not forget the personal guarantee that he's given around his belief as to how his systems can help you achieve consistency as a trader. And once again, Ryan, thank you very, very much for your time today, and I hope you have a great day.